Hi folks, it's Rob Flux here from Property Developer Network, coming to you for yet another Sunday session. And this week, our topic is joint ventures and how to win friends and influence people to invest in your next project. Now, right up front, I'm going to apologize up front because we're doing some major renovations at the moment, and we're shuffling our house around. And so all of our furniture has moved out. My shelves are pretty close to empty. The room is quite echoey, so my humble apologies for the sound quality of this particular video, but pretty sure that the content is still going to be something that you're really looking for. So joint ventures, how to win friends and influence people to invest in your next project. Okay, so firstly, joint ventures are one of the 6 no money down strategies that we actually teach. And we're going to delve into a little bit about not how to do a JV, but more how to find somebody who wants to invest in your JV today. Okay, one of the most important parts to that process, though, is actually not waiting until it's actually too late to find that JV partner. What I see many times is people waiting until they've actually got a deal before they try to find the money partner. And the problem is then that you start to look desperate, okay, and you can't do the deal without them. Because of that, 1, you don't come across very professional. 2, you're trying to stress and get things across the line really quick, and you're cutting corners left, right, and centre to actually get the JV partner across the line. 3, they're not sure how to trust you when you've never met them before. They don't know, like, and trust you. That's probably the 3 things that you want your JV money partner to be doing, is know, like, and trust you. So what you need to do is you need to start searching for those money partners very early in the process, okay? So well before you're actually finding any deal at all, you want to be filling your pipe of deals, and you want to be filling your pipe of potential investment partners or JV partners. So make sure that you actually do that right at the very beginning. I'm going to give you some tips and tricks on how to do that today. One of the biggest challenges that I see is that many people, particularly doing their very first deal, have this limiting belief that no one will actually want to invest in their first deal, okay? And I can speak for the fact that that was me, right? Way back when I was doing my very first deal. I didn't think that anyone would want to invest in me because, you know, it was my first deal. I had no experience, had no runs on the board, and I felt that I had to prove myself and do my own project first before other people would invest in me. But let me give you a tip that I got from a previous employer many moons ago, back when I was actually working in the IT field, and I was getting charged out at some exorbitant rates. I wasn't paid at those exorbitant rates, but I was being charged out at exorbitant rates, and I didn't understand how I was helping these multinational companies like BHP, Flight Centre, Virgin Blue, all that sort of thing, and how they were willing to pay such crazy numbers from an hourly rate perspective. Nearly $300 an hour they were paying for my time. And my boss sat down with me and said, the problem is that you think that you need to know everything, and the reality is that you don't. You just need to be able to solve the other person's problem. And if you can solve the other person's problem, then they will want to actually engage with you because it makes their life much easier. So I want you to think about exactly that when you're talking to a JV investment partner. Now, you need to understand, well, what is in it for them, and, you know, how do you solve the other person's problem? Well, their primary problem is that they don't have the skills, the knowledge, the experience, or the time to either find the deal or run the deal themselves. And so you're providing very valuable service to them. And if you're able to provide that valuable service to them, they will want to engage with you. So many people have invested in many other people's first deal within our network. We've got nearly 10,000, more than 10,000. We've got nearly 11,000 people now in our network. And I'm going to say 80% of the real deals that we present every single month are some form of JV or money partner investing in someone. And quite often that's their very first deal. And so it's, you know, when you see that over and over again, I want to remind you that it is that limiting belief might be the thing that's actually holding you back from moving forward. So let's firstly look at, I guess, the pros and cons of doing a JV to start with. So firstly, the pros are that it joins the resources of two or more entities to achieve what neither of them could actually do individually. So one person has time, person has skills, and the other person has I guess the financial resources, and so you're able to assist each other where one is strong, the other one is weak, and where the other one is weak and the other one is strong. The cons are that they can be complex. Okay, so now I won't go into, I guess, how we're actually going to structure these or anything like that today. It's more about how do we actually get people to invest or want to invest in us. But in saying that, you're going to have some good legally binding documents that clearly define a whole bunch of things like roles and responsibilities and exit clauses and all those sorts of things. And one of the challenges in this process is that in doing this, we are humans, and so we're dealing with multiple personalities. So, you know, you might be a very dominating person, they might be a very passive person, or might be the other way around. So you've got to understand the dynamics of those roles. So a JV can help you both, but it can also get quite complex in actually managing it. So firstly, what are some of the things that you would need to consider in the JV? Well, I guess the different roles and responsibilities of each partner. So, you know, who is the money partner, who is the sweat equity partner, what each particular task is going to happen along those lines, how you're actually going to structure that, who's on title, those sorts of things are all important from a legal perspective, and we'll touch on those in a future episode of our Sunday sessions. But in doing so, you want to make sure that before you go out looking for your JV money partner, that you want to get yourself deal ready. Okay, now when I say deal ready, this isn't to say you're in a deal, but you need to be ready to get a deal. Okay, so you need to firstly assess your circumstances, and understand your situation, understand where your shortfalls are. So where are you short on cash? Where are you short on equity? Where are you short on serviceability? Where are you at in your deal pipeline? That sort of thing. Where are you at from an experience perspective? If you don't do that internal reflection up front, it's going to be very hard for you to actually articulate your position to the other party. And it's also going to be hard for you to find a deal that matches your criteria and a JV partner that matches the shortfall that you've actually got. So you need to take a very hard look at that right up front. You need to also go out and get yourself some accounting advice. Understand what entities you're actually going to be doing your deals in. This is important because when you have your conversation with your JV partner, you want to be proposing the entities right up front, because there's no point you getting into a situation where you're having a conversation, they ask you a tricky question and you go, not really sure. Instead, you want to go, well, my accountant has told me that in order to set these structures up, you know, I need this particular combination, and you know, we're happy to plug in you as the JV partner with whatever entity structure that your accountant gives you, but this is how the actual project is actually going to run. You also want to make sure that you get all of your tax returns up to date, because in many instances, if you're going to go into, I guess, a JV, you may need to, I guess, disclose to the other person, I guess, where you're at from a financial perspective. So that's the first part. The second part is you may need to actually contribute in some way, shape or form into the finance situation. So you're going to have your tax returns up to date if you happen to go onto the loan documents in any way, shape or form. So make sure that all of that stuff is up to date. Also go get yourself some legal advice, okay? Again, legal advice on your entities, because your accountant will tell you the best tax structure and your solicitor will tell you the best asset protection structure. So you want to make sure that you've gotten advice from both of those in order to have an open and frank conversation with your JV partner. In addition to that, you want to start to put together your joint venture templates, your legal documents that you are going to present to your JV partner well in advance of you actually getting a deal. What you want to do is have them have time to go through all those legal clauses right up front when there's no time pressure at all involved, and when they can have a good conversation with you rather than the stress of, hey, we need to close this deal on the spot. Okay, so that's you getting yourself deal ready. And that, as I said, this is in parallel to you actually trying to find a deal. It's important that you do that, because if you don't, then you're trying to get all of that done at the very last minute. You've got a deal underway. You might only have 14 days or 21 days of due diligence, and you're trying to cram so much information in. You're trying to convince your JV partner to come on board. You're trying to get your legals done. You're trying to get your finance approved, and you're just going to come across as this stress ball. They're going to struggle to want to engage with you. So make sure that you take away all of that so that you can have nice, clear, calm conversations with your JV partner as you go through. Now, whilst you're getting deal ready, you also want to make sure that your JV partner, once you've got them on board, you want to make sure that they're also deal ready, okay? So you want to negotiate all the legals that we just discussed with them up front. Sit down with them, walk them through the legal documents that you've got drawn up, understand where their issues and challenges are, get them to go get independent legal advice, and let them know that once you get a deal, you will be using that exact template, and all you'll be doing is plugging in the parameters of the deal, such as the property address, the purchase price, the feasibility, etc. Okay, so there's no surprises at the very last minute, and that way they can really just concentrate on, is the deal a good deal, okay, rather than the stresses of the, I guess, getting the legals up to date. You also want to make sure your JV partner, once you get them, that their tax returns are actually done and that they've engaged with a finance broker in order to get all of their finances up to date and ready to go. Now, as I said before, you're trying to do this. You've got a deal funnel that's coming through. So you're jamming all these opportunities into the deal and you're assessing them all. You know, is it developable? Is it profitable? You know, can you negotiate the terms you want? And at the same time, you've got this other funnel sitting over here, and you're going to be jamming a whole bunch of potential joint venture partners into there. Now, I say potential because I don't want you to count the chickens before they hatch. When you get someone who thinks that they're interested, it takes a long time for them to know, like, and trust you. So they're the first three things that you're going to have to try and get to happen before they'll actually consider the actual the project itself. Okay, so know, like, and trust is going to take some time. And then even if you've got someone that says yes, it is very possible that at the last minute something will happen. You don't know what's going to happen with their work. You don't know what's going to happen with their family situation. You don't know whether or not they're actually just going to chicken out because they're freaked out at the stresses that are involved in something like this. Okay, so you try to jam these people into this funnel. Now, where do you get those people? Well, that's a really important question. So one place that you're going to get them is meetups like the ones that we run. So we run monthly meetups in 3 states, so Brisbane, Sydney, and Melbourne. Every single month, we're going to find lots and lots of people that are also wanting to invest or develop in property development. So that network that you build is really important in order to try and foster the opportunities to actually work together. But there's other places that most people are afraid of actually doing, okay? Now, the most likely place that you're going to find someone to invest in you belongs in this thing, your phone, okay? So when you do that, you've got a phone book with hundreds or even thousands of contacts in there. So you've got friends, you've got family, you've got work colleagues, all of those people that you're probably too afraid to actually tell them what it is that you're doing or actually ask them for assistance. Now, it's important that you just don't go in like a bull at a gate and just go, hey, who's got some money? I'm going to walk you through that process as we go through this presentation today, but rather you're going to let them know what it is that you're actually doing and allow them to volunteer themselves to be of interest in there, okay? So the workplace is a fantastic place to actually do this. You've got consultants, you've got your accountant. Your accountant has massive number of high net worth individuals in their environment. So, and they know who's got how much money, I guess what their risk profile is, all that sort of thing. Your solicitor equally is very aware of those sorts of people as well. So they're two really good sources of places to get your JV partners. We also run a Facebook group called Development Site Deal Hub. That's a fantastic place to actually get your investors as well. So make sure that you actually do that. And lastly, there's also the vendor who actually owns the property. Don't forget them as a potential JV partner. Okay, sometimes we're just too afraid to actually ask. Now, no matter where these people are coming from, okay, whether they be meetups or work or friends, family, whatever it is, okay, what is really important is how you approach the situation. Many, many times I've seen people go in like a bull at a gate and just go, hey, I'm doing a project, I need some money, are you in, right? And that's the wrong approach, okay? Instead, it's a long, slow engagement process. Now, imagine yourself going out and onto the dating market. You know, you don't go asking someone to get married on the very first date. Instead, you take them out to dinner, you wine and dine them, go out dancing, do a few things like that. So it's going to take a number of engagements, a number of conversations to actually get there. So it's important that in doing so, you do this softly approach with them, okay? So when somebody comes up to you and says, let's just imagine a scenario where you're in the lunchroom or at the water cooler and just having a sip of drink, and somebody comes up to you and says, hey, what were you doing on the weekend? Now, most of us will go, not much, or they tell them about something that we did socially. Why instead don't you tell them, hey, I was looking at realestate.com for this particular deal, or hey, I went door knocking and did this, or I went to this meetup and spoke all about, watched all these industry experts and real deals presented at the Property Developer Network. Tell them what it is that you're actually doing and what your interests and passion are in and around property development. All you're doing is talking property and letting them know that you're doing property and that you're studying. You might have yourself a mentor. You might have yourself some form of education that you're doing. So let them know, hey, I was studying all weekend, understanding how to do a feasibility. Now, all you're really doing is letting them know about your passion. Now, if they also have a passion in property or property development, then they will likely step in and engage and actually start to ask questions. And from there, you then have serendipity, just allow the conversation to evolve. If they have no interest in property, then you'll see them backpedal, or you'll see them have, their eyes glaze over. They're not interested at all. They're probably the last person that you want to have actually try and ask them to actually invest. So as they engage in their level of investment, of their level of interest in your property, that's going to allow you to evolve and have many, many future conversations with that person. Hey, almost found this cracking deal the other day. 90% of the things all look good, but there was just one thing. And that's then going to go, oh, tell me all about it, right? I'm quite interested in how you're actually finding these opportunities and what it is that you're actually doing. And you're allowing them to know you, like you, and trust you in and around this property development space, okay? So make sure that you're doing all of that. But keep it really simple, okay? When you're doing this, you want to make sure that you're making it all about them and not about you. So don't be forcing onto them, hey, I need this money, partner. Instead, inquire about them. What are their fears, pains, and desires in and around their investment space, in and around their investment in the property space, those sorts of things, to say, well, maybe I can help you to solve your particular problems. You don't know where to invest. Maybe I can help you in a future project if that's of interest. I'm more than happy to have that chat when a deal comes by. They don't come by every day, but I'd be more than happy if you wanted to. Make the focus about them and about you solving their problems, because you are the one with the skills, the knowledge, and the experience, okay? If you can help someone else with their problem, then they are going to want to engage with you, okay? So you need to firstly find out what it is that they want, what it is that they need, what is their passion in property in this particular instance, and how are you going to help them to quench that thirst, okay? If you can solve their problem, then they will help you to solve yours. And too often, we're trying to make that all about us, okay? Now, in doing so, make sure your reputation is king. Make sure you're honest, you're upfront, you have lots of integrity, that you let them know this is truly my first deal, but I've been doing all this study and I've got this mentor and I go to these meetups and I've got this massive network of support that sits around me, and I put 15, 20, 30 hours a week into doing this research. Let them know exactly what you're up to. What you'll find is that the people who already know you, your friends, your family, your work colleagues, they are the perfect people to try and invest in us because they already know who you are. They already know how you deal with things under stress. They already know how you're going to, how good you are at your problem solving, how creative you are with your thinking. So these people are the ones that know that even if it's your first deal, they know how you as an individual are actually going to be able to deal with that, okay? And too many times we don't give them the opportunity to actually do that for us. Now, what I would say to you is that you've really got to start to think, because we're too shy to talk to our friends, okay? We're too shy to talk to our family because we're worried about how we're actually going to be perceived. And what I'm going to say to you is, if you can make it about them and not about you, then, and you can solve their problem, then all of that will just actually disappear because they will genuinely seek you out, okay? They'll go, hey, Rob, I really like what it is that you're actually doing. I'd love to get involved. How can I get involved? Now, I'm going to say to you, if you're going to be making all this money in property development, would you not want to share with your friends? Would you not want to share with your family? Why is it that we are being insular and not including our friends and family? Instead, we want to get, they're the very people that I would love to bring on the journey. They're the very people that I would love to share the rewards and the spoils of what it is that we're actually doing. Okay, so some tips and tricks for you, okay? Don't wait until after the deal to search for your money partner. If you wait, once you've got the deal, you're going to appear to be very desperate, okay? So that's critical that you I guess, courting these people well in advance of you actually having the deal, okay? Important that you let people know you're a property developer. It's amazing how many people just don't tell their friends and family that they are, okay? They're too afraid of what that perception will actually be. Now, if they're not interested, they're not interested, but that's okay. But if they are interested, they will engage. So wherever humanly possible, okay, raise it at the work water cooler, raise it at your barbecues, all those, you know, if you're at the kids' sporting events and that sort of thing, and you're talking to the other mums and dads in the group, tell them what it is that you're actually doing and what you're interested in, okay? If they're not interested, don't push it, okay? But allow the conversation to actually evolve and allow and see where that actually is going to, where it's actually going to go. Don't be like an Amway salesman, okay? So don't, you want to be upfront with what it is that you're actually doing, but politely disengage if they're not interested. You know, an Amway salesman will convince you that, you know, with smoke and mirrors that they've got this huge business opportunity, but they won't actually tell you anything about it until you actually go behind closed doors and you're kind of trapped in there for a good couple of hours. Don't ever put your potential investment partners into that boat. You know, be clear and upfront as you go and as that actually evolves. And as I said before, make it about them. So understand their fears, pains, and desires. Now, we've spoken about fears, pains, and desires and in the negotiation process a couple of times on these Sunday sessions. So I'm not going to go into huge details here other than to say, go back and look at some of our previous Sunday sessions about how you can actually understand people's fears, pains, and desires. But if we can understand, well, what is it they're afraid of, then let's mitigate that. Okay, we're afraid that the deal might not go well. Okay, we'll put the joint venture agreement, make sure that that actually captures what happens if it doesn't go well. What are their pain points? Well, they're not getting ahead financially. They want to set their kids up. That sort of thing. So their desires are they want to be actually financially free, but they don't have the skills to do that. They don't have the time to do that. They don't have the, I guess, the inertia that you may have in this particular boat. So make sure that you understand those fears, pains, and desires, and you are able to articulate how you coming up with a deal will actually resolve those particular issues for them. You've been warming them up for a while now, okay? So having these conversations and that you've engaged with them and said, well, you know, if a deal actually comes up, would you be interested in actually getting on board with me? Okay. Now, at this point, as a deal actually starts to come through, you want to actually then present that to them in a very professional way. Okay, so it's not just a conversation, it's not just the back of the envelope or a napkin or something along those. along those lines, we're actually going to put together a full information memorandum, or what is called an IM. Now, an IM is a summary of the project itself, okay, and what it is that the project's going to do, and how that's going to be structured, and the kinds of returns and the timelines and all those sorts of things. Now, for the people that are in our education program, the property development formula, we give them an information memorandum template, and it's got a whole bunch of things in there for the to actually look at. So it's got an executive summary that talks about the project itself and what the project's actually trying to achieve. Some background as to how the deal came about, what the investment opportunity might actually look like. Then there's the project itself. So, is it a townhouse project? And if so, how many? What the timelines and status of the project is. It's just at the acquisition stage, and you've got 3 stages to go in the deal, and these are the timelines that that's actually going to take. Who is the project team? Your town planner, your civil engineer, your architect, your property mentor, all those sorts of things in your project team. There's going to be a suburb overview, so the demographics of the area and the kinds of people that are moving into the area, and why the product that you're creating is perfect for that particular opportunity. You're going to have comparable sales, both of the raw product and what you're actually buying, and also of the finished product and what it is that you're actually selling, so you can actually demonstrate that there's actually demand for that particular thing in the area. So you're going to go through and you're going to show your marketing plan and exit strategies, and your multiple exit strategies where appropriate. You might have some conceptual designs that you've already got drawn up, schedules of finishes of the products that you're actually creating, all those sorts of things. Now, depending upon when you get your JV partner in, you might get them in a little bit later in the project. You might already have development approval plans in place. So you'd have copies of the plans, you'd have copies of any rendered drawings that might reflect what the finished product is actually going to look like. And of course, you're going to put in there a feasibility as well, so that they've got a really good overview of what that project is going to look like. They understand what their involvement is, what the investment is, what it's actually going to do, what the timelines are, what happens should it actually go wrong, that you've got multiple exit strategies, all those sorts of things you've proposed to them. So that's it makes you look extraordinarily professional by putting something like that together. And 2, it's a nice, clear synopsis of the project itself, so they can make crystal clear decisions. They can show that to their spouse or partner, and understand that chances are the 2 of them are actually going to make that decision together, not just the one person that you're actually talking to. So make sure you put an information memorandum together. Now, in putting together your information memorandum, one of the biggest things, and especially if this is your very first deal, is your project team. You want to have a page which is your project team, okay? It's a thing called borrowed credibility. Now, borrowed credibility is showing the expertise of the team that sits around you to say, well, yes, it's my first deal, but all these people are actually going to be looking after me. So I've got my town planner, I've got my civil engineer, I've got my architect, and I've got my property mentor, all sitting over my shoulder, all making sure that I'm going to run this project, as close to perfect as humanly possible. So make sure that you put an entire page dedicated to the project team, the skills and experience of those guys to capture that borrowed credibility, to just get that person across the line if they're, have a little bit of doubt about your capability. Then you've got the JV agreement itself. Now, again, joint venture agreements can be quite complex legally, and we're not going to go into all of that right here, but you want to have pre-drawn that up way in advance, and you want to have them have reviewed the document well before you've actually got a deal. So you're going to go through all of the roles and responsibilities, the exit strategies, I guess the dispute resolutions, the how the project's profits are actually calculated, all of those elements that you've actually got that goes into the agreement. You're going to have presented that to them well before you actually put the IM in front of them. You're going to have them get their independent legal advice way in advance, so that on the day when you present that IM to them, the only thing they're thinking about is that IM, okay? They've already built the know, they've already built the like, and the JV agreement builds the trust, because now you've captured all the issues and concerns, all of their fears, pains, and desires into that agreement. And so now the IM, when you present it, is crystal clear that this is a go or no-go type decision for them, because they already have all the known outcomes of everything else that they had in there. Now, in putting that document together, okay, there's a few things that you want to be clear about. So firstly, you want to understand who it is that you're actually doing a deal with. So are you comfortable doing the deal with that particular person from a personality perspective, from a finances perspective? Are they really the kind of person you want to get in bed with? Okay. Negotiate all those legals beforehand, as I've touched on before, and what written agreements that you're actually going to have in place. Understand the roles and responsibilities, so the individual tasks that each particular person is actually going to perform along the way. Okay, what the entity structures are, I touched on that before, because you're prepared, you spoke to your accountant, you talked to your solicitor, you put that structure together because you know what the best asset protection and tax minimization strategy is going to be for your particular deal. And then you've captured what it is that you need that JV partner to provide with regards to their financial situation. So is it going to be equity? Is it going to be serviceability, security of the loan, all those sorts of things? So you've already preloaded that into that JV agreement, okay? You need to also capture what happens if one person needs to leave the project halfway through, and what security that you guys have got over the top of each other. And also you want to understand, I guess, how and when the proceeds are actually going to be distributed. So, you know, who's going to be paid back in what order, when are the profits actually going to be distributed, and how much is your profit split actually going to be? And then what happens if halfway through the project, one party actually wants to sell their part of the deal? So all of those things are really important. You've negotiated all of that up front and taken all of the sting out of the conversation, so that when the deal lands, you know that with confidence that you can actually go ahead. And the reason why you do it in advance, one, I touched on it before, is that you don't want to actually appear desperate. But two, if you've got certainty, if you know exactly the parameters that your particular JV partner can operate on, it's going to help you with certainty in order to negotiate with the ultimate vendor who's selling you the deal in the first place. So you'll know what terms you need. You'll know how long it's going to take to get finance for your JV partner. You'll know how long it's going to take for the documents to be signed. All of those things are going to be already pre-known, preloaded. Otherwise, what happens is you go in to negotiate with the vendor and you're not sure, because you don't have that money partner sitting behind you. So you're trying to buy as much time as you can, but that might actually crash the deal. So, you know, really important that all of that is dealt with well before that deal actually comes on board. So there you go, folks. That's how to win friends and influence people in order to get people across the line for your particular joint ventures. Now, I'm just going to share screen a little bit here. So a reminder that we do these Sunday sessions every Sunday, or almost every Sunday, I should say, at 5 p.m. Brisbane time. So just go to our Facebook page, facebook.com/Property Developer Network, like that. And when I go live, you will get the alert come up in front of you. On top of that, reminder that we actually run 2 Facebook communities. So there's the Property Developer Network, where you can actually get your deals. Your community tries to help you with your issues and challenges in your deal. So where to find deals, and you know, what strategies you might want to deal with, or particular issues you've got on site, that sort of thing. And the development site Deal Hub is a great place to find investors, but it's also a great place to offload deals and get finder's fees and that sort of thing for it. We also run monthly networking events in New South Wales, Victoria, and Queensland. So developernetwork.com.au/events, and you can come to our next meetup anytime that you want to. And lastly, reminder that we do run a property development course called Property Development Formula. If you want to join us, just go propdev.info/PDF, and you can find out all about the program. And if you are interested, it's an application only process. Just hit apply, and we'd be more than happy to have a chat So that said, folks, what I'm going to do is I'm going to go to the audience and see what questions may have come through. Just allow me to get Facebook to give me the, I guess, the update as to questions there. So give me 2 secs while I find what questions we've got coming through. Okay, lots of people saying hi. So I'm just going to say hi to all of those. So Luke, Sean, Rachel, Moxon, Peter, Ursula, and a whole bunch more. So I'm not going to name everybody, but just saying hello. Sean says, good evening, mate, and hi. Oh, they're just a lot of highs. So who else can I add in here? Peter says, some other people, accountant, dentist, doctors, no family for me, unfortunately. Well, sorry about that, Peter, but you're right. Dentists and doctors, high net worth individuals. You know, if you've got a great relationship with those people, don't forget to add them to your list. Okay. Moxon says, amazing advice. I can vouch that all our sophisticated investors have come through the exact same way. Fantastic, mate. Jane's got some issues with Facebook freezing. Sorry about that, Jane. Hopefully that came back. And Sean says, I can't stand the Amway method. Someone tried to get my attention that way. Always be upfront and honest. Absolutely. Sorry, itchy nose, folks. Terry says, top shelf, you're the best kind. Regards, Terry. Thank you, Terry. Appreciate the heads up, mate. I'll give that not only a like, but I'll give that a love. There you go. So Harry says, great advice, Rob, and for free, it shows me your love for your people. Thank you, Harry. That's greatly appreciated, mate. Terry says, trust in your JV, always hard. Not quite sure the question that you're saying there, Terry. Yeah, so if you've got a little bit more, flesh out your question a little bit more, mate, and I'll try and help you out. I think Terry's got a question that's gone over multiple lines, and I'm just struggling to actually understand the intent there, Terry. So, mate, if you just want to flesh your question out a little bit more, I'll try to come back around to it. Okay, Moxon says, trusted partner is the money partner. Well, both parties have to be trusted, mate. It's important that everyone knows, likes, and trusts each other, knows how they're going to deal with issues and challenges, what they're going to do with under stress, what happens when you've got disputes, all of those sorts of things. So the trust is a massive part. Shay says, thanks, Rob. Keen to learn more about your process. I've requested to join your pages. Future investor. Thank you, mate. Be really careful that you don't say future investor to the entire world, mate, because what happens is that people will flock on you like seagull on a chip. I guess keep that to yourself if you are a potential investor and you've got some money to yourself. Just go and selectively engage with individuals that you know, like, and trust if you want to reach out. Otherwise, thousands of people will just be inundating you and you won't know which ones to actually trust. Sean says, bit of a tangent question, Rob. Are you going to write a book about your experiences and knowledge? 100% would buy it. It is on the list, Sean. It's up here somewhere, but haven't had the bandwidth, mate, just to get around to it. So it is in the pipeline. So lots of people saying thanks. Great session as always. Maria says, are you able to help with developments in Perth, or are you generally advised against WA? Marius, absolutely, we can help with developments all around the country. With I guess the framework in how developments work everywhere is pretty much identical. There is some differences in terminology between states and some slight differences with every single council having a different set of rules. Sorry, excuse me. So 537 councils in Australia, so 537 different ways of doing the exact same thing. But yes, we can help all the way over there. More questions coming through. Andy says, is there a common financial structure for JVs? Is there a commercial construct to support, or are they funded by cash partners? That's a complex one, mate, to actually answer. There are several different common structures to actually put together. Depends on, I guess, whether or not you're going to be keeping stock, whether or not you're going to be flicking stock, whether each of the JV partners, one might be selling everything, the other one might be keeping some. So there's some combinations there that will actually change that, but it's generally going to be, I guess, either a company or a company trust arrangement in actually running that. And then it's just who are the, I guess, the either shareholders or beneficiaries that sit underneath. And whether it doesn't have to be cash, but you know, certainly if you've got a money partner coming in, then they'll probably need some level of serviceability as well. So sorry, I've got a super itchy nose today. Not sure what's going on there. Felicity says, talking about what you're doing in the workplace, do you have any ideas around that in a small workplace where you could potentially have a boss getting worried about your commitment to your business, or just figure you're going to be leaving soon anyway? Felicity, understand the, I guess, the message there, but I would be communicating to them that is your passion and that you're, I guess, doing that in your own time. I wouldn't be communicating upfront that your intention to leave. That said, I went for I guess my very, very last job when I was working in IT. My very last job, the boss asked the question, so where do you see yourself in 5 years' time? And the typical question answer that he's anticipating is in your chair. And what I said was retired. And that did throw him back a little bit, but he knew that I was committed to, I guess, this being the last job that was actually going to enable me to get out. And so I was going to do a good job until then, because you still need that cash flow on a daily basis. And so long as you're delivering for them every day, then they should be good. And you can then plan your exit and make sure that if they are challenged, that you tell them, look, I'm going to give you 6 months notice or 12 months notice or whatever it is the arrangement that you have. So they've got time to find someone and train someone to actually replace you. Lillian says, how many touch points in general from a meeting a partner to closing the deal? Lillian, that's a fantastic question. I guess if you look at stats out there, it takes someone anywhere between 3 and 7 meetings to even remember who you are and start to build a rapport. Now, we leave our first impression in the first 10 seconds or so, but I guess the long-term lasting impression with whether or not they actually know, like, and trust us. You know, it's going to take 3 to 7 just for them to understand that. Then you've got the back and forth with the legal. I'm going to say, you know, if you're doing it in a slow and relaxed way, it's probably going to take a good 2, maybe 3 months in actually trying to negotiate someone. And so hence why I'm saying don't compress it down into 14 days if you're trying to do it in a due diligence period, because you're just going to blow yourself up and blow them up as well. Hopefully that helps. Michael says, hi Rob, could you please touch on some issues you have had with JV partner in the past and how you would overcome these issues? Yeah, I can touch on a couple of them. What I would say is that in the early days, I gave a little bit too much power to the JV partner when they didn't have any skills in actually running the deal. So I had done all the education. I guess I'd shadowed other people. I had a mentor sitting over the top of me. I knew what decisions I wanted to make, but I gave them too much power and they chickened out, and that caused some challenges where I wanted to do one thing, but because they had the power of veto in some instances, like signing sales contracts and things like that, it meant that I no longer had control, and it meant that the project was less profitable because they wanted to just exit on the spot in a very particular way, and I had, I guess, a different strategy in mind. That in that first JV that I actually did that, we lost $150,000 because of those particular decisions. And so I would never, ever do that again. So control within the project. If I'm going to be the sweat equity partner, that I'm the one that's going to make the decisions. So that's really important. That's probably the biggest lesson that I would actually say. Now I've lost where I'm up to with my questions. So here we go. Maria says, thank you for answering my question. I've joined live right at the end. No worries, mate. No problem at all. Sean says, awesome. Let us know when you start writing. We'll pre-order at least half a dozen. Okay, that's with regards to my book. No problem at all, mate. Just send the cash. I promise I'll write it at some point. No problem at all. Maria says, what would be the best place to find more information about your program and support? Mate, I'll put the link in a little bit after, but it's propdev.info/PDF. So property development formula, so PDF. But I'll put that link in there, I guess, once we finish going live, so I can actually type away, no problem at all. Okay, Carmen says, for JV agreement, is profit split the only way to share the profit at the end of the project? It's not the only way, Carmen, but if you're doing a joint venture, it's the most likely way. If you're doing anything other than that, then you're probably doing a project management agreement or something along those lines. So profit split tends to be the way in a joint venture. You know, sometimes there'll be a minimum return. Sometimes there'll be, I guess, a maximum return, but it's going to be some form of profit split typically. Felicity says, I'm irreplaceable. Thanks for your ideas, Rob. Felicity, you are absolutely irreplaceable. I can vouch for that. Lillian says, thanks, Rob. Very helpful, as always. Rachel is talking to Felicity behind the scenes. Chris says, thanks for sharing. No worries, Chris. You're welcome, mate. Moxon says, thank you very much for sharing your insights and expertise. It shows the real passion to help others. And Jane says, so an approach would, whoop, I've just lost Jane. So an approach would be transparent with potential JV partners. Absolutely, you should always be transparent. Let them see what's and all the good, the bad, and the ugly of what's actually going on, because in the project, they want to actually understand how you're dealing with issues and challenges. So because problems occur all the time, Jane, in a project, as you would know. So you want to be prepared to show them the problem, but that you have solutions to the problem, okay? People care more about, can you solve the problem, rather than pretending that the problems don't actually exist in the first place. That appears to be everyone's questions, folks. So thank you once again. Fantastic session as always. And now I am doing a whole bunch of renovations at the moment, as you can see. So half painted walls and empty bookshelves and a whole bunch of stuff like that. So may not run a Sunday session next week, but watch out for the alerts. Make sure you like our Facebook page and you'll get those alerts as and when required. Other than that, folks, I'm going to see you next time. Bye for now.